if you look at some of these levels, Facebook down to where it was in May, it's very easy for the media and everyone to freak out about these things.
Now you're not in the media anymore.
But I think from the overall perspective, you have to ask the big question: is technology and these technology companies going to be a bigger part or smaller part of our lives overall over the next 5 to 10 years? And I think when you look at it, you have to answer it's going to be part of a larger perspective. So, yes, regulation might be coming. And that gets to be a very interesting question, and there have been some noises out of Washington even just this morning about what that might look like. But from my perspective, the path of technology is the path forward for the economy and for the market overall.
But that doesn't tell me what I should pay for a share of Facebook.
I'm not going to tell you that. But would you disagree with me?
Well, no,
David?
I wouldn't necessarily, but it doesn't mean that I know who the winners and losers are going to be.
That's true.
I can look now at who the winners are,
right.
But I can also at least start to wonder, particularly when it comes to Facebook, given so many questions that we have still in terms of understanding why they significantly lowered their outlook for both margins and for growth rate,
right.
Because they are such a dominant player and provider.
I think that's fair, but when you take in the totality of it, sort of just the change in behavior, even our change in behavior personally in the last 2 to 3 years, again, I get back to the basic question: are you going to be spending more time on these platforms or less? And they might argue, or you might argue, hey, you're actually going to spend less than you were than before. But proportionally, overall, in terms of your overall time spent, just go on the subway, go on the street. What's everyone doing? They're not looking up, they're looking at their phones. That's all they're doing.
So Chris, what does it mean for the stocks? Are you adding exposure? Are you buying on some of these big dips in technology stocks, or you're shifting away?
Just getting ready certainly to add. Facebook's getting into my range as a value manager. I mean, they've got 2 billion eyeballs. My wife uses Instagram even more, and I absolutely agree that people are continuing to use these social media stocks increasingly, and I just think you just wait until you get your valuation levels that you like, and you buy them.
So you're getting close, you said, on Facebook, yeah?
Yes, absolutely.
What represents value for you, Chris? I mean, I've heard some people talk about the 170 level. Interestingly, the stock did bounce late in the session today. We should note that. Well,
yes. I think, it's very close to it now. I think anything below 19 times earnings, the market's at 15 and a half, 16. So you're pretty close, and that's pretty good for a stock that's growing like that. And I think a lot of the sell-off is due to the managers and the tyranny of benchmarks. I mean, they're all tied to these benchmarks. They see, one hiccup, and the next moment, they say, I got to go. And, I think you take advantage of other people's mistakes. Facebook is really getting into my wheelhouse at this point.
Well, it's an interesting term. I like that, the tyranny of benchmarks. If we could just talk about the tyranny of benchmarks for a moment. If we look at the percentage of companies across individual sectors, across the S&P that have beat their earnings guidance, it is a pretty substantial number. I think 83%.
Yes, and the growth run rate is about 22%.
So that's the market overall. That's the market overall. So I'm actually getting pretty optimistic, especially when you factor in GDP growth, about where things are headed overall. These numbers are pretty incredible.